Hey, CGS investors, it is Tuesday, March 12th. Taking a look at the long-term picture, we'll kind of go from the high-level view and then we'll just zoom into the shorter-term timeframes. But as we know, the market here, we go from a rising tide, a bullish phase, to a falling tide, and we are back into a rising tide environment. And if we were to compare this weekly chart of the SP 500 major trends to the CGS strategy down below, as we can see here, during a rising tide, we tend to naturally get more and longer signals to the upside. And then, of course, when the market becomes chattery and starts to struggle, we have short-lived trades and trends, and it becomes just protection, survival mode. And then, of course, as we're now back into an uptrend, we start to get some of these longer moves that allow us to continue to grow. So that's kind of where we are in a nutshell. I think the market here, when we look at the SP 500, I feel like it's getting pretty close to a high. I feel like there could be potentially one more big kind of squeeze or pop to the upside, but we'll just have to see how it goes if we get some kind of blow-off phase that kind of goes parabolic and how that unfolds. Now, if we take a look at our CGS strategy, our daily chart, you can see we've had the long triggers here since November. We've played these moves. We've hit the 15% targets. Market is starting to get a little more choppy. As you can see here, a very strong initial momentum change where you get big gaps, strong moves, and then it kind of goes into, it's a little bit chattery, but overall somewhat controlled moves, strong moves to the upside. And now we're starting to get into a lot more gaps and chop. And it's consolidating. It's a running consolidation, meaning instead of the market running up and then taking a pause and a breather and then having a run up and taking a pause and a breather in a nice stair-step bull flag or pennant formations, we are really just seeing the market it's a running correction. So it really is, the way it's correcting is simply going from spooking people out on a quick drop and then popping up to some highs and getting people sucked back in and then having a big drop. And just this noise here is shaking people out all the way up. And they're constantly trying to pick a top, and it's climbing a wall of worry. And running corrections carry, to me, quite a bit more risk because they can lead to a very explosive rally, a blow-off type, just one big squeeze to the upside, very big move, but they can also fail and create a very sharp drop to the downside. So they carry a lot of risk volatility with them versus a bull flag, bear flag pattern. That's what I have noticed. Everybody sees the markets differently. That's what makes a market, but that's what I have always noticed. So getting a little nervous with this chop in the market. But when we take a look at the sentiment chart here on our right-hand side, and we stretch it out a little bit, it does actually look somewhat controlled. We have had a nice little rally, a little bull flag. We kind of had that second half of that bull flag, and really we're kind of consolidating here to some degree with a lot of people betting against the market. People are moving out of the market and expecting price to roll over and sell off. And hopefully this continues to move higher. I mean, the overall trend is up. And this is what we have seen over and over again is we see people try to pick a top. They think the market's going to go down, and then the market goes the opposite way. They start to panic. They bet on lower pricing, and the market takes off. And then they try one more time. They're like, oh, this has got to be a reversal, and they get hit again. And so the only thing that's different here, we've got a lot of people picking a top. This is really dragging out. This is over a week of that consolidation. We had about a week of that type of price action back here as well. If we go back in time, there's quite a bit of it back here. And so this is, obviously, this can be seen as very bullish. People are expecting the markets to go down, and the markets generally go the opposite direction of the masses. And that's what this is kind of focusing on, is the masses. What are where's the money flowing? And where the money's flowing also tells us their mindset. So we know they're bearish. We know they're betting against the market, and they're putting their money in defensive sectors or moving to cash type of things. So overall, we'll hopefully see this market pop and have a nice push to the upside. It'd be nice to hit our first target on the SPY position here, which we can see on this other chart is right up here around that 524 level, I think is what it is. So hopefully we can get there, lock in some profits, and then have our stop move up to our entry price. So that way, when and if the market does roll over and crack, we can get taken out and still be able to lock in more gains. So that's where we are. We just need not much more of a push. We need a 3-4 day run to the upside, and we will be looking pretty in terms of we've eliminated pretty much a downside risk. If we take a look at the NASDAQ, which we are not in at the moment, it is our NASDAQ position got shaken out. We locked in about 3% on the final little portion after we hit our 15% target. We got back in, hit a 3% move, shook us out, and the market is still digesting, which I'm happy with, because generally when the stock market moves 15% from an entry price, and both the SP 500 and the NASDAQ have done that, generally there's not a whole lot more upside left before the market goes into a much bigger type of correction, which would reset the trend to a downtrend. And then if it starts to go higher, it'll reset into a new uptrend and allow us to get back in for a fresh new big leg to the upside. So we are the QQQ position allocation here is sitting in BIL, earning interest and dividends each month or day. And I'm quite happy with that at the moment, because I do feel like this market carries quite a bit of risk where it is right now. If we zoom in on the short-term charts, we have our 30-minute regular trading hour chart here on the left-hand side. And this is just the 30-minute chart of the SP 500. I have the 20-day moving average overlaid on the 30-minute chart. So this pink line, I try and color code it, is the same as this pink line. And you can see the momentum. We went from a red trend to orange, and then it kicked to a green trend. And when we just look at it from this regard, you can see we're just kind of working our way up the 20-day moving average. Now, I'm not a fan of a big gap up, and I'm not a fan of something that stretches this far from the 20-day. Whenever you start to get up pretty far from the 20-day, then you can see it start to come back. This feels like a little bit of an exhaustion move. You can see we had a bunch of FOMO here over our blue line, our threshold of people just piling in, wanting to get into the stock market. Generally, that means we're going to have a short-term weakness. That means that's the last little few people at this current time getting sucked in. They're willing to pay any price. They pay through the nose, which is a big gap up, and then the market corrects and consolidates. And we've seen this over and over again. Typically, when we are in an uptrend, we naturally have the market getting FOMO more often. It's constantly pushing the upper limits. When we're in an uptrend, we're actually more interested in all of these spikes of panic and fear, all of these little spikes which are dwarfed from this one big day that we have here. Let me see if I can get down here. Let's make this a little bigger. But more or less, whenever we get these big spikes, let's zoom in, we tend to see the market put in like a short-term low. If I was to just draw, you can see a short-term low over here. All of these kind of spikes are usually getting down into these levels. Very, very short-term type of price action in the markets. So overall, we're looking more so for a wave of panic selling. So we already have people betting against the market. We can see on our CGS sentiment chart, but we don't have panic selling yet. And I'd like to see this panic selling line move up over here. That tells us not only are they betting against the markets, but the last of the people are bailing out of their long trades. They're scared. They say, get me out. And once we have that fear, then the markets can put in a bottom, which this little bear flag pattern here is pointing to still a pretty significant pullback to bring us down towards this 20-day, another % drop or so from where we are. And that, I think, will spark some fear. And then the market could very easily continue to work its way up to the right. So that's kind of where we are in a nutshell. We just got to let this market do its thing and work itself out. If we take a look at some of the defensive plays in the market, we have been seeing utilities moving up recently as a bit of a defensive play. Consumer staples, which were long in the band strategy, continues to move up and is pushing to new multi-week highs, which is nice to see. Again, these utilities, consumer staples, even healthcare are seeing these top three. I usually leave them in this top. I kind of have this order sorted here for a reason. These top three are kind of defensive plays. And no matter what happens in the economy, we need healthcare, we need, electricity, running water, toothpaste, toilet paper. So these are usually defensive plays, and these can hold up. These are generally low volatility. They move slowly, and they can be positive while the rest of the market is down, or at least hold their value when the market sells off in some cases, which we saw yesterday. The stock market was lower, yet we saw consumer staples push higher. And the fact that we've got consumer staples pushing up nicely today is maybe telling us that fear is starting to creep up a little bit, and people are wanting to move to a slow sector, defensive sector. Today, we are seeing the dollar move up. We're seeing gold move down. Gold's down about 1%. We had a blip this morning. I talked about in the BAN morning update. We had economic data come out, creates this great big pop, which is just noise. Generally, the first pop or drop with news is usually in the opposite direction that it's going to resolve. The market has a great way of faking everybody out. So it's going the opposite direction. It's going down. And I think we might see the precious metal space take a bit of a breather, which is a good thing. I talked about this many times in interviews, the BAN update, and I'll talk about it here. So the whole point is this market has had a very strong run to the upside. If we draw kind of a line across here, you can see we are at a major critical. Now, there's a lot of lines on this chart. I know it's can be a little noisy, but there's gaps and wick highs and all kinds of previous highs. We are at a pretty critical pivot point. There's no doubt this is a very explosive, strong move percentage-wise. A pause and pullback here would be a good thing, and that would be the halfway point. Whatever this distance is, can be stacked on the next move, meaning we could see a very big move. And what's nice about the miner space is we have this internal high here, and we've got another standout high right here. And when you break through two previous resistance areas, you obviously have some momentum. You're busting through two levels of sellers and just gobbling up their shares and just keep on going. That is an impulse move, meaning tons of momentum. The first pause and pullback is usually an opportunity, and it's usually going to go higher and that'll be the halfway point. So there's some good opportunity, I think, brewing in the precious metal space. I feel like gold, silver, and miners are all kind of at resistance right now, and I'd like to see them pull back. If you just look at the chart of silver, we see big rallies and then pullbacks, big rallies and pullbacks. And here was a big rally and it pulled back in a much more controlled manner and then went on to post some bigger gains. So I'd like to see a little bit of a consolidation and a pause before, and then hopefully see that take off and go higher. If we look at the energy space, crude oil stuck under resistance. If we take a look here, we've got this rounding formation. It's trying to potentially build a base. It has kind of been poking up through these levels. It is looking like it's trying to move higher. It is stuck under resistance more or less. But if we look at the energy space, XLE sector, energy stocks have already broken out of this base. Let's just draw a line across here. We've more or less, depending where we draw these resistance lines, you can see energy stocks are already breaking out, and they should lead. Usually the leverage plays lead the commodity, which is one of the reasons why I'm not too excited about the precious metal space for the next massive rally, because gold miners and silver miners are lagging and they're underperforming and they're not leading this market. They're just kind of following gold. Gold's breaking out, so it's bringing attraction into the miners, but we're not seeing huge money really pile into the miners and them skyrocketing. But we are seeing the energy stocks start to move up. These are the leverage plays. So, if oil was to move up, the energy stocks should move up even faster. So smart, savvy investors will get positioned into the energy stocks, anticipating that oil is going to break out. So this is a little bit more of a bullish sign for oil, saying, hey, oil hasn't broken yet, but people are starting to leverage up and getting into positions that will benefit when oil breaks to the upside. So we'll keep our eye on oil and see if it breaks out. The leading indicator here is telling us that oil should continue to pop and move higher. Overall, I think that's about it. I'll touch on Bitcoin. Let's just take a look at it. Again, I am no expert in Bitcoin. It is hitting new all-time highs, lots of volume. I don't really have a ton of insight with Bitcoin, other than this is one of those very, very fast moves to the upside. Obviously, whenever we get these very big moves to the upside, you can see very sharp pullbacks. Bitcoin, I mean, I have a different view than everyone. I don't see Bitcoin as an investment unless it is like a small position, because this literally moves 15 to 20% in a day or two easily. I don't consider investments that move that much. I don't consider them investments. I consider them more like a lotto ticket, more of a speculative play. So this, to me, we are making nominal new highs, which, based on Fibonacci and just in theory of the markets, always piercing, trying to hit these nominal new highs and then changing direction. We have just done that again. We've just hit a nominal new high, and we'll see where things go from here. And I do think there's a ton of attention. Everybody seems to be trading it. So it'll be interesting to see how much further this goes. But to me, somebody to just go and buy right now and is all excited about Bitcoin, So we'll see how that unfolds. In terms of bonds, let's take a look over the chart of bonds. TLT, it is trying to carve out a bottom. Let's just take a look at the big view. Obviously, we've been into a multi-wave correction. If you're a Elliott wave person, 1, 2, 3, 4, 5, you could argue we got our 5-wave down, but I'm not into the Elliott wave myself. But long story short is, it is looking like we're getting into a bottom. We are seeing huge volume. I know advisors are being advised to tell their clients to get into bonds. It's going to be a very good long-term play, which I can't argue with. I do think there's going to be lots of potential, but it is still in a downtrend. They are picking a bottom. Rates could stay where they are for a long time. Bonds could flatline here for a year or two. They could even drift lower. So again, it is really just speculating, picking a bottom. You're buying something falling in value, and that is not the ideal situation. Overall, we'll see if bonds can get some traction. They do have a bull flag pattern here that potentially we could start to see them move up. This would be a pretty significant level on the chart that it could come up and consolidate. We're starting to see the moving averages, the long 150-day moving average and 200-day moving averages starting to flatline a little bit. So the sentiment is slowly shifting, and there's a potential we get long and trade TLT this year. If this momentum flatlines and starts to turn higher, it might slowly shift back into an uptrend. It's getting closer. It takes time for these major trends to shift, and that's really what we want to do. We want to let that happen before we start getting involved. And one of the reasons why the CGS strategy hasn't been really knocking it out of the park is because we've got this huge disconnect. We had falling interest rates, and rising interest rates here, and we're seeing bonds move down, and they're not favorable. Typically, we can move into bonds and take advantage of them, but bonds are in a bear market, so we don't have that nice volatile asset, which are bonds, to take advantage of. So we go from the stock market and we go all the way down to the dollar index or to BIL, which are very slow things. But eventually we'll get back into having bonds, and that means we're firing on really the SP 500 or the indexes, and bonds are really where the big money is made. And of course, we're only firing on one of those cylinders because bonds are out of favor at this point. So eventually they'll kick back in, and we'll be rocking and rolling from that regard.